The UK is set for a deep recession and Europe most likely as well after the Bank of England overnight raised interest rates by the most in more than 25 years. Business Editor Ross Greenwood joins me live. Ross, good morning. This comes just a week after the Treasurer forecast a soft landing for Australia's economy that says that there will be no recession here, though. He's continuing to maintain that.
Oh, absolutely, and it's a quite different picture that's being painted both here as compared with Europe and the United States as well. So this was a big wake-up call for the UK in particular overnight. Andrew Bailey, who is the Governor of the Bank of England, was making really strong statements, and it largely comes as a result of the crisis that they've got with Russian gas and therefore the price of utilities and things. So this is what the British Bank of England did last night, raised its cash rate by 0.75% to 1.75%. Inflation is the big thing here. So the inflation in the UK right now, 9.4%, but the forecast from the Bank of England overnight sees that peaking out at something like 14%. And so this is really the key as to why potentially the UK is driven into recession.
Now, this rise in energy prices has exacerbated the fall in real incomes and so led to another significant deterioration in the outlook for activity in the UK and in the rest of Europe. GDP growth in the UK has slowed and the economy is now forecast to enter recession later this year.
And that is a staggering figure, Ross. 13% inflation. We think it's bad here. It's double in the UK.
Well, that's right. And doesn't that say everything about really the world? One of the big problems for Australia, if there is one over the horizon, and that is that if there is a deep recession in the United States, in Europe and the UK, does that somehow affect financial markets? Does that really become imported here into Australia? But there's one other aspect of this, Pete, and that is really if you look at Australia's trade performance right now, it's never been better. So when we last went into recession, our trade performance was terrible. We were basically importing a lot more than we were exporting. Right now, it's completely the opposite. So yesterday, trade surplus data came out. It's yet again a record, $17.67 billion. So grain in the past year up by 21%. Meat exports, the value of those up by 12%. Wool up by 10%. Iron ore, which is our biggest, it was up by 5.5%. Coal is a little bit off, but the value of it we know is highly valuable right now. Gas exports, well, they're down 2.2%, but will be stronger as a result of the global situation right now. So the contrast between what's taking place, say, for example, in the UK and the Europe and Australia right now is chalk and cheese. You can see here car imports down by 11%. That's actually a supply problem. They just can't get the cars. Food and beverages down, electrical goods also down. That might also tell something of a tale about Australians just starting to curb their spending in the face of higher prices and also higher interest rates. But really, it's a situation where Australia's trade performance is so strong right now. That is the thing really holding up any suggestion of Australia going into recession.
It's hard to see that we don't follow the lead from overseas, though, Ross. I mean, Janet Yellen, Jay Powell, they said inflation wouldn't be a problem. I remember talking to Josh Frydenberg when he was Treasurer asking if inflation was going to be a problem here. He said it wouldn't be, but then the tides turn and then eventually it goes to buggery and we end up following what happens overseas, and it's hard to believe that we wouldn't therefore go into recession if the others do.
I guess, look, you're right. And this is the point. Australia seems to have always been behind the curve.
Yeah.
But because we can sort of see what's taking place in other parts of the world, and because that trade performance is so strong, one little interesting tip there, which people probably won't pick up, everybody says, oh, well, that's all about China. And it is about China, the iron ore and some of the gas and so forth. But do you know the interesting part about that was that exports to India have doubled in the past year, that exports from India have increased by 60% in the past year. So there's more trade going on with the second most populous nation on earth right now, which is probably good for Australia. So as I say, Australia's always been noted as a lucky country, and we sort of seem to get out of tight squeezes as a result of really the trade performance with other nations like India and like China. The question is whether we are fortunate this time, and indeed whether our household sector is strong enough to withstand the rate rises that are inevitably coming here as well.
There is that as well. Meanwhile, Ross, a couple of the highest profile Aussie businesses in the US have announced their latest profits in the past hour. So what's it looking like?
Okay, so those two businesses are Atlassian, Mike Cannon-Brookes, Scott Farquhar, their business listed in the United States. You can see here the net loss. It was $614 million US, and the revenues there have jumped by 34%. The Atlassian shares are much stronger in aftermarket trading. The second one that's just reported in the last few minutes is Block. Now, this is the company that now owns Afterpay. It used to be called Square. Gross profit $1.47 billion. It looks like the losses from Afterpay have been trimmed somewhat. It imagines that many of those people in the buy now, pay later space are really starting to concentrate on the amount of bad debts and losses that they're incurring from people who simply don't finish up their transactions.
OK, Ross Greenwood, thank you.